Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. We're not your financial advisor, so whatever you do, it is at your own risk. We normally start at 10 o'clock, so we have 3 more minutes before we start, and then we will start analyzing the market where we're going from that direction. Thank you. Welcome, everyone. So let's see what happened here. We have covered many times, many hours, many days, many years. When the market goes between the two yellow lines, you should not be uh, taking any more short trades. Those the area where the short or the long, we have the same two yellow lines on the top, and once the market entered those two yellow lines, you should not allow your auto trade to start taking any more trades to the short side. As you see right now, this is going to reverse. And that's the same thing on the NASDAQ. You're going to see the market uh, estimating around 53.53 right there, somewhere in the middle. The market is going to reverse. And this is an idea when you have $25,000 in a profit on a trade, and you have $10,000 on a profit on the trade. You need to exit out of those trades because maybe you're going to have another bar, but this is it. So don't get excited by going short on a full throttle in those area here. This the area is the end of the line. A lot of people make mistakes with that. And look, I said around 53 level, and look at this. So we missed one take. No, not even one take. We didn't even miss nothing. It is, I said around 53, and it is 52. Okay. So if this market is going to break those area here, it might be potential going a little bit below the yellow line, but it's not going to be any more short trades. You see, this is the, actually, I'm gonna demonstrate to you that I'm gonna go ahead and I'm gonna show you on that trade here. Look, the reversal has plotted by itself. And look at the accuracy when you are trading. Those the area. I mean, I don't want to go through reversals because this is a lot of education on a reversal. And what I'm trying to show you here, do not follow that trade. What I'm trying to, this is my estimation of this market is about to be ending. The advantage on this, when you are using a micro account, uh, one trade at the bottom to the top or from the top to the bottom on a micro account is not going to hurt on a micro account, because while the traders are auto trading here and the auto trade has activated new trade here, when they are going short today, with our luck, between those two here there is no support. But if we look at the Nasdaq, there is a support area between those two yellow lines. So when you see the support area between the two yellow lines, this is money. This is money. This is money. So a lot of people keep looking at ATRs, MACDs, momentum, or SI. They're the same indicators from the 80s, and they've been tweaked. So if we notice here on the Nasdaq, came in between those two yellow lines, while the amateur traders are taking short, we're taking long with confidence. So to our traders, when you come in between those two yellow lines and you have a support area, you have a fib between those two yellow lines, this is money. This is money. While the amateur traders are taking short, you're taking long. This is one of the tricks on the reversal, but I don't want to go through the reversal, teaching some people sitting on a multimedia trying to sell indicators when you're trying to buy kilo potato from them or a banana. So I'm not gonna educate idiots trying to sell indicators on a YouTube for free. But what I wanted to show you that, and I will be covering on the private webinar for our traders, where you can spot the end of a trend in the market with confidence. Why the reversal has more money than the trading with the trend? Because there are not many professional traders know how to reverse. They just glued couple indicators. They put many indicators on the chart because they don't have a self-confidence to trade with a trend. So when you see a trader or somebody trying to give education on trading or trying to sell you CD, listen to his voice all the time, and when they are implementing too many indicators on the charts, they are not traders. The reason is when you put too many indicators, when you have a busy chart, by the time you get the okay from those, by the time you get to verify the trend or whatever it is, you are late to go into the market. When you have a lot of indicators, you're waiting for confirmation. You need A indicator, B indicator, C indicator, D indicator to give you the information, and then you plot a signal. And then what happens when you plot a signal and you trade, you are late. Where professional traders, institutional, I used to work for a company in Luxembourg. I was on the gold silver back then. I was not on the currency. And you don't wait like the amateur traders to take a trade and waiting on a MACD, ATRs, all this junk. A professional trader should spot it when the trend is over. A professional trader should spot it when the trend is trending. What is the pullback? What is the re-entry before your indicators implement signal to you? So as we see here, most of those amateur traders, they wait on an RSI, momentum, ATR, MACD, and they are vulnerable. Why they are vulnerable? Because the ones they have a little more years experience. As an example, on the ES, they use 10 to 15 ticks. The newcomers, they are very generous, and we thank them for them because your money is coming from those idiots. They don't know how to trade. When you win a trade, you're making money from somebody made mistake. So those newcomers, they come out, they don't calculate like what I have covered last week about the stop loss. You have to be very stingy on the stop loss. And when you see somebody selling auto trade or indicator on a 30 minutes chart or a 15 minutes chart, nobody from the group asking him where in the hell my stop loss on a 15 minutes chart when the bar, it is it is over $1,000 for every single bar on a 15 minutes. So this is where the mistakes happen before you start trading is the management. And then the biggest mistake when you overload your chart with a bunch of nonsense indicators, they're lagging on a fast market. And by the time you're getting the confirmation, you are very late. On top of that, you buy an auto trade, two couple indicators, they are glued with each other on a super glue, and they call it auto trade. So the whole fundamental of this multimedia has been misleading in newcomers to the trade. And there are more confusion time in the trading. There are more in the older days, when a newcomer came in, the percentage it was between winning trades and losing trade between the newcomers was around 60-40. At the moment, when you investigate what those uh, traders are doing, that you will find out they are using some platform. Maybe it's not good for the future trading. I mean, NinjaTrader is not my platform. NinjaTrader, I mean, I have no connection with, I'm a partner of NinjaTrader, but I have no connection with them. And I have not even done webinar with NinjaTrader for many years. And I don't know what happened in NinjaTrader anymore. I give up on them. But this is not this. It is with the NinjaTrader, when you are future trading, it's the most accurate platform, where some other platform, it is good for crypto, and there is some other platforms, they are good for Forex. And but for the future trading, the different where a lot of people getting lost at those 25, 26, and 24 and 23, the percentage of losing trades by new traders is not coming because the indicators they are using, the lack of education, the lack of knowledge is, and to our many marketer, every other guy, he used to sell potatoes, now he's selling indicators on some different platforms. And we know some of them. You know, I have an office in Europe, and I have an office in Houston, and most of the refugees come in from different countries in Europe. They are selling indicators. They used to be taxi driver, vegetable guys. They sell potatoes. They sell. They work with Uber, and now they stop, and now they are selling indicators. So what I'm saying is, not everyone is selling indicator. It's giving you the proper education, and is only marketing. So now let's go back to this market here, which I have given you. This one here was not a trade. I have given you where most likely this market is going to reverse. As we see, after I showed you where the market most likely is going to reverse, this market has start plotting reversal, 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 reversal. If we look at the market condition indicating, yes, there are many, the sellers over the buyers from 1 to 60 minutes, from 1 to 60 minutes, and all the whatnots indicator pointing the market is throwing up, is going really short. The reason I put that trade in there to show you that this is where the area most likely is going to reverse. And if we notice right now in this market is still going between those area here, and the market was going very strong to the downside. And now if we look where we told you most likely this market, there are different conditions. I'm not going to put it on YouTube here, but you can see how the market right now, it is flattened out, and bars without any indicators. You can see the bars. Let me give you a picture of it to see, because sometimes when you have a trained eye, you can see something beside your indicators. Let me show you this. If we notice here in this right now where we said most likely is going to be, the market is sitting in this area here. It's sitting right there. You see, it's no longer going long, and it's no longer going short. It got stuck in this area here. So this is indicating, without any indicator, when you have a trained eye, this is somewhere, it is a trend exhaustion. Without any indicator, you can immediately spot there is fatigue in the trend, and there is where in the older days when we used to trade on the without the internet through the satellite before even the internet came out, we used to have a lot of V shape where the market drop and then goes up again. And I used to be excellent with a V shape. I love the V shape. I can spot it immediately and reverse the market, close position, open position. When the internet came in to the trading, when you have a bunch of traders, they are in and out of the market within few seconds, from scalping to swing trading to everything. There is no longer we have a V shape or M shape or W shape. So right now, because of the fast internet and because of the everybody is trading right now, everybody with a little few dollars, he can put a platform, put an indicator, and call himself a trader, or a buy dishwasher called Autotrade. And now he is a trader with a $15, $20 uh, data feed, and then he is a trader. Where in our days back then, the data feed cost me $650, where an American family with two children, husband and wife, that were not able to do house shopping for $650. An average back then, when we were paying $650 for a data, an average household with a wife and a husband and two children, that were 500. My home in Dallas, my home in Dallas had a swimming pool, two bedroom, two living room, and three bedrooms on the top with a swimming pool and everything. When I bought it back then, it was $27,000, and I'm paying $650 for um, for a data fee, where my home cost $27,000. Um, so you can tell how much expensive was the data to get your data on your. So right now it costs you $20, $25 to get data on your, and you don't need a satellite either. So that give a lot of people come into the market and a trade, which what happened has smoothed out the price very much, because now the internet, everybody is buying and selling. So there is no more V shapes, M shape, W shape. There is none of them anymore. You hardly see the market drop and go back like a V shape. So what we have right now is like a boat going on a U-turn. How is a boat going on a U-turn? It takes a big circle to make a U-turn. And this is exactly how the market right now, when it wants to change from short to long, it is like a boat making a U-turn. So when we see here, we see the market here, there is an exhaustion in the trend, and is no longer whether you are taking a trade here or here or here or here is making any money. And this is the biggest mistake you do, and you are trying to activate an auto trade to go on a critical area where you don't need to take short anymore. So when we first started to say you are no longer eligible to take a short trade, because this is the area most likely the market is going to turn around like a big boat. There is no more V shapes like in my age. So now we take this one here. Where is the re-entry short? If you, there is a still possibility to take a re-entry short on that. You have two trades in there. So here is the re-entry short, but that re-entry short is a very small trade. The question is, sometimes you have to ask yourself, Sometimes you have to ask yourself, is it worth it to go from here to here? Because there is no more short, and this is the re-entry short based on a pullback. I'm gonna close that trade here because this was not a call trade. It's just showing you where most likely the market going to turn around, and that's what it did. It turned around here. So now, where is the re-entry for a short? Is right here, and this is a rebust. And as I covered last week or the week before, you always have to put, whether you are auto trading or you're trading yourself, does not matter. The biggest mistake you're making by going short in here, because here could be the market mover that might push it a little bit further down a few bars. That's all what they can do. So there is no way you can take a short trade here and protect it. If you want to take a short in here, your stop loss is here. Your stop loss is here. If you take a short from here, your stop loss is here. And if you take a short from here, your stop loss is here. So always, or when you hear somebody, when you read, a guy is bragging, I used 25 ticks on a CL. Yeah, an idiot. Because when you are generous with the stop loss, when somebody is telling you he's using 25 ticks on an ES, or he's using 15 minutes chart and using 75 ticks on an ES stop loss, run away. Just run away. Don't even communicate with this guy, because the first step is always your trade has to be cheap. In order for us to survive 10 trades a day, we always need to catch a trend to make money, and you should never go on an expensive trade. So as we see here, this is, as we covered the yellow line, this is your re-entry. And look what happened. This was the re-entry. I missed it. But this was your re-entry on the NASDAQ. And then, but this is a scalping, because the yellow lines is right here. And this is the end of the line for the short. So you don't have too much room on that trade. You need to probably somewhere around there, you need to cover that trade. If you go short from here, you need to cover yourself and take it profit in that. So there is not much beef for me to take a trade. Only if you have a stop loss above that number with a cheap trade, then you can go ahead and put a sell trade in here. Only if you have a cheap trade. So that's why those cheap trades sometimes, it was maybe on Tuesday, we did the same thing. I put a re-entry on the long, and then we finished the webinar. Those where I put those entries on those ones here, they made each one of them over $1,000. I think it was Tuesday, because Monday it was for traders, not for public. So as we see right now it's 10:26. The minute I came into the webinar, I told you this is the end of the line right there. And I showed you what it is, and it was the end of the line. So while everybody was taking short with their dishwasher machine called Autotrade, we were going on the opposite direction. So this is the difference when a trader is using bunching indicator on the chart. By the time he gets confirmation in those situations right now, in order for him to get confirmation, he needs one more bar to tell him the short is finished. and now the long started. When he's taking a long, we are sitting on a short trade waiting on him to come to us. So as you see right now, the market is lost momentum. There is no more short trade. And you can see right now from that bar all the way here is just a flat. It's not moving long and it's not moving short. And that's why I explained to you that the market right now, because of the fast internet and the fast trades, is no longer we have a V shape. We have like a boat, or if you are an ex-military, it's like the submarine. It goes and it takes a very big U-turn to turn around um, and go in the opposite direction. So at this moment, we cannot take any more short on those area here. We just trying to find the potential to see the minute the market is turning around, because those re-entry, the re-entry on this Nasdaq is a very small trade. It's going to be somewhere around 25,720 or somewhere around there. And the ES is going to sit down like a yo-yo somewhere in those area here. So there is no more short trade. I cannot take any more short trades, or I cannot take pullback re-entry, because the pullback re-entry is very close to the end of the bottom. So I'm not interested anymore to take any more short trade. The only thing I'm waiting right now to uh, to find another direction to enter the market reversal. There are many other things I cannot show right now on the YouTube, but there are many ways you can find another entry on the reversal. And yes, yes, yes. Is the screen clear for you, sir? All right. So right now there is nothing we can do. We have 30,000 on the Nasdaq, and we have 14,000 on the ES. And right now, I don't want to go short anymore. The market has to turn around. So we're not going to take any more short trade. They are a very high risk between the two yellow line. Eventually, the market has already pushed the market further down than what we are expecting. And this is a very hard area to take a short. As an example, if we look at the Nasdaq, we have a reversal between the two yellow line. Those reversals do not repaint. Okay, and this is another reversal. And when the market hit the support area between those two yellow lines, we had a signal say buy. Now, sometimes life is not perfect. Sometimes the market push couple bars down. Not every time we can nail the market all the way to the last tick, but that's life. Welcome to trading. Sometimes the market push couple bars down and you have to be aware of it. But as we see on the Nasdaq, look at this. If you are panicking, oh, Sam, I need to take short on the Nasdaq. I mean, you're cooling me off. Yes, I'm cooling you off. Look at this. This market here rebound from the 25,715, and it came again. I don't believe in double top, double bottom, double top, all this baby top. I don't believe in it. What about triple top? What about supply demand? I don't believe in this, but I believe something that this market is holding at this number here. That's it. Whether it's double top, double bottom, who cares? Could be triple top, triple bottom. Who cares? What about supply demand? So all this baby talk, I don't like it. I just know this support area here is holding. That's all what I need to know. Double top, double bottom. I'll leave it to some miserable traders. Sit down and figure out this. So as you see, the NASDAQ is sitting right at the support area, right at the support area. It might go 1 bar down or 2 bar down. Don't get excited over it. Stay determined. There is no more short trade in there. That's it. Because it's really agony. You take a trade in here and the market does not go your direction. So if the market wants to go a couple bar down, let it be. Don't get excited with it. Let it be. It's not your trade. It's not your game. This is what it is. It's not your game. Let it be. Eventually, this market is going to turn around after 1 bar or 2 bar, and then we spot the market when it turns around, but now it's overcooked to the short side. We have the NASDAQ already made 33,500. We have the ES already $15,000 up. That's more than $45,000 right there. So you're not in a desperate to take any new trades or jump on a very high risk area here. And you can see also without any indicators, you can see the movements are very slow. They have digested, the system has digested the numbers and now is moving slowly. It's no longer moving fast, and it is going now 1 step forward, 2 step backward, 1 step forward, 2 step backward. And that can kill your stop loss. So you got to be careful. So as we see right now, this market going back and forth, and there is no direction, and we are waiting on the right time to take an entry. As an example, because the re-entry has become so low to the bottom, and here is the yellow line, is no longer valid to re-enter on a pullback short. So what we are waiting on, this market to cross this line. Below that number, everything is short. Above that number, everything is long. So while those people are struggling with the trade in here, I'm no longer interested in the short. It's a high risk short right now, and I don't know when it's going to turn around immediately. So right now I set my eye on there is a resistance here, and then I set my eye, those the area I will be very much interested in to enter the market, and the short is over. Those high risk area I'm not interested in. Also, one of the things you can do on an on an auto trade, you can take any auto trade. All of them are, my auto trades are going crazy. But if you don't have a trade, and when the market hit the bottom like this, you turn on long trade only. Because the market hit the bottom, I'm no longer interested into the short. So what I do, I close that trade, and I will say, take a long trade only, especially on the swing trading. Why? Because when this one here turn it on to long trade only. It's not going to respond on a couple bars below the yellow lines or above the yellow lines, because some of you don't know how to time the market. Is fine, but you can direct the auto trade. You know this is the bottom. You can correct your auto trade to go ahead and take a long trade only, and then you can relax. But you should not take short trades once the market entered those two yellow lines. You should not even try to activate anything in there. So this is what the secret is, to know your limitation when you're taking a long trade and when you're taking a short trade. So right now we are waiting. We're not that far from the long trade, by the way. We are not that far from the long trade. So we are waiting on the market to start turning around, and we will be we should start dying out a little bit at the time, at the moment. Wow. The Bitcoin to drop to 85,000. Jesus. From, you know, my advice, do not day trade crypto. Jesus Christ. Okay, so let's wait. Also, for our traders, you need to keep your eye. We need to spot when the boat starts sinking, when there is start leaking and sinking. We need to spot the market exhausting before any other trader. How are you going to do that? In those situations, when the market goes between those two yellow lines, we've been using them for many years, and I know they are accurate. The first things you need to keep your eye on, the sellers over the buyers. Right now, if this one here, this is a small indicator, there is a sellers over the buyers with a 5 different time frame. There is 5 different time frame working in the same time on this little indicator. The first things you start seeing, this indicator, the sellers start going down a little bit, one step, and the buyers goes up one step. The second things you start seeing, the 1 minute on the market analyzer start turning green. Now, the 1 minute, we should not take any action, because the 1 minute can turn back to red. Simple. But when we see the 1 minute, 1 minute, 3 minutes, 3 minutes, 5 minutes, 5 minutes, they start turning to green, it's telling you the boat is making a U-turn. And this is where the market is shifting from full throttle short and is getting stronger to go long. So you are adopted and now you are aware of the market changing direction to the long side, and then you stay hold on your trade until we start seeing what you see. You start seeing the red going from one level to one level lower, and the green, they start getting stronger until they become even. And then the green start getting advanced on the red, and the market analyzer start getting in the green from 1 minute to 3 minutes to 5 minutes 10 minutes, and start turning around. And this is where you start spotting when the market is start changing direction. So it's always when you are done with the short and when we are stopping taking short, our eye is no longer on an indicator or a P&L, whether it's $37,000 or $37. It's irrelevant. It's just number in the market. You stay focused on the direction of this market to go around, and it is a matter of time. It will go around, and it is finished. It's no longer uh, there is the market is not really moving that fast to make money anymore. It's going back and forth, and it might drop a couple more bars. But this place is prohibited to take short anymore. Our job with the short is done. It was tons of money on every single auto trade, and right now we put on hold until the market going long again. But you cannot keep banging on the market short anymore. It's finished. You need to know what is your limitation and when it's safe to trade, take a trade, and when it's not safe to take a trade. You need to sit on the side. So right now, and this, it was a lovely day, a lovely profit, but we should not be greedy. We are done with the short, and now we need to start looking for long. And we are waiting on the market to start turning around, and then we will spot it before anybody else spot the reversal trade. So right now we are waiting. And I will let you know when it's going to happen. I promise you that much. I'll let you know. On the market analyzer, there are 5 auto trade, and all the auto trade hit their target. You can see on the ES, while we are waiting on the long, on the ES, we have a 3 signals short. You have the entry price. The market analyzer is based on one contract. You have a 3 different signal. When they are all in 3 red, that means you are in the right direction if you're auto trade taking a trade or you are taking a trade. And right now, you have the reversal. Expect the market to start turning around. When you have the reversal, even if the market go 1 bar below the reversal, indicating trend exhaustion. So so if you see the reversal and the market keep going down, does not mean you're fine. No, it indicate for you there is a trend exhaustion, and this is what it is: profit taking. When you see the reversal, there are some profit taking in this area here. So on the market analyzer, we give you the reversal number, and then we give you the target, and then the market calculate your P&L based from your entry signal and the ticks and the amount and the target. So on the market analyzer, the ES nailed 406 ticks, total of 5,000 based on only one contract. The NASDAQ 2,113, it is $10,000. You don't have to trade all of it, but if you have one contract on the ES, one contract on the NASDAQ, one contract on the YM, a total amount of profit around $17,000 based on one contract. That's what it is. Based on one contract, if you're only trading the ES, NASDAQ, YM, you are in a profit based on one lot, $17,000, 10,700 on the NASDAQ, 1,800 on the YM, and 5,000 on the ES, total of around $17,000 based on one contract, without even doing anything to the market, without even reading in the market. So this is very good. So what we have here, Russell, CL, forget the DAX. We don't need the DAX. The gold, we don't need some of them. But if you wanted to see the total of those are 7,000 ticks, which equal to $60,000 in profit from this market analyzer. This is the auto trade for the market analyzer, but they hit the target, so they all finished. And it is very simple. And you can see how it come in and hit the target, and you can see it on the Russell. It's right there. A target hit, and now you don't see the target hit because already hit and finished. This is the CL. Look at this, because of the calculation on this is not pre-made. The calculation on every trade is different, depends on the market movement. So, and this is funny, the NASDAQ went below the calculation. The calculation on the NASDAQ, it was a short trade in here. It is short trade at 26,163, and the market estimated 25,726, and it is supported by a fib, but the NASDAQ went further down, where the other came right in line with the target, which indicate, telling you, there are people are pushing this market very hard to the downside. But it is not anymore our game to ride a wild horse. We are done with the short. We are waiting for the long, and we don't know when it's going to turn around. And when it's going to turn around, you have no time to buy anymore. So we're going to wait, and we're not going to take short trades anymore, and we're not going to take long trade until the market came into our standard, and it's right there right now. The buy entry is right there, and now the buy entry is right here, has changed. It's right here, the buy entry. So now it is not that far from the price right now. So we're sitting on standby. We're not taking any more trades. I don't know what's going on in the market. I cannot see the news. Well, on my news, there is nothing special here, but maybe there is some kind of news has been triggered somewhere on the television. Some kind of, I don't have a television here, but maybe there is some kind of news. We don't know. I cannot see it from the market perspective, but maybe there is some other news making the whole market spook. There's something else. This is not normal. I cannot put look on any other news while I'm on the YouTube. So we're gonna stand by waiting. We're not gonna now the buy order has lowered to here. This is my buy order lowered to here. Yes, Vito is crazy, but maybe you have the luxury to know what's going on beside the market news because there is nothing on the market news, but could be something, I don't know, maybe some war started somewhere. I don't know. It's extremely the market bearish. I don't know what's going on, but I'm not going into the short trades anymore. It's extremely bearish, but I'm not going to take any short trades. The Nasdaq already hit 44,000. The ES 20,000. This is crazy. Oof. We're gonna stay a little bit longer till we see the short is over. We're gonna stay a little bit longer. It's 10:56. Normally we are done at 11, but I'm gonna stay a little bit longer with you, and I'm going to uh, um, uh, to see when it's over, and I'm gonna guide you on it. It is. It is. In the older days, Vito, maybe some of you that you were not born in the older days, when before the internet came out, and when the YM goes down 250 points, the market closed. You cannot trade for 15 minutes. Maybe some older guys with my age, they know that, or they've been there. Back then, when the ES uh, goes down 12 point, the market shut down for 30 minutes. You cannot trade, you cannot get out of the market, and you cannot put in trade in the market. The New York stock, Chicago, both of them, they shut down for 30 minutes. That's why it's so easy right now. But back then, also on the Nasdaq is about to finish. Yes, sir. The Nasdaq. Once you see the Nasdaq, look at this. What we were talking about. That's why I'm gonna stay a little bit longer. You can see now the sellers start going down with a 5 different time frame, and the buyers they went one up level. So it's not over yet, because when you see the 1 minute in the green, can turn around the 1 minute. When you see the 3 minutes turn in the green, it's not gonna flip to the red immediately. The 1 minute, there is a potential to turn around again within a bar. It might turn around red again. So we cannot depend on the 1 minute, but it is the beginning of the end. So as we see, there is one step, and there is some green, some light start coming to some different indicators, and the market, it is about done. Now for the reversal on this one here, you can easily take it from here. Right now, the reversal. On the ES, there is nothing to lean on with the reversal. The reversal is all the way down here, but we are very far from it. So the reversals are, this one here is a beautiful reversal. This one here is very far, I'm not sure. So the reversals are here. The buy on the Nasdaq is right there. And the buy on the ES is right there. So here what it is. You have two buy, one is reversal, and one it is when the markets start turning around from red to green. Here is the orders, and the reversal are from here. So for this condition, the market, and plus you got reversal, 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 and then you have a buy signal right there. You had a buy signal here, it fell, but does not mean just fell. It means it's the end of the line. Profit taken in those area here. Profit taken in those area here. So we should see the market start going up again. I can see you have 2 steps down on the sellers, 2 steps down, and you have 1 step down on the 1 level down on the ES. And now we're gonna start seeing the green going higher, and the green going higher, and the red start going down, indicating we are turning around. So it's a very critical area. That's why you should never trade short once you enter those 2 yellow line. Whether you are auto, sometimes you're gonna make money taking short. I'm not gonna say 100%. There is nothing 100% in the market. 9 out of 10, when the market goes between those 2 yellow line, if you take a short, you're gonna be losing trade. 9 out of 10, not 7 out of 10. The max 8 to 9 out of 10, you're gonna be reversing the market from those area here. Now the CL took a trade on the CL. should start taking a trade on the should start turning around the CL. Let me see the CL. Oh, there is a lot of problems on the CL. There is a lot of resistance. Forget it. It's messy. The CL is messy, so we're not going to do anything. So we're going to stay a little bit longer to see when this market turn around. We normally finish in 1 hour, but we're going to stay a little bit longer. I would like to see the bottom of it. So what we did, we estimate right now the reversal is in this area, 25,465 and 6,879. Those are the reversal. For the long, 69.35, 25,712 for the long trades. So those are the only options we have right now. For the Nasdaq on an auto trade made 43,000. For on the ES 21,000. I mean, it's crazy. That's all what I can say. It's crazy. Here it is. It's coming. And remember those two, the yellow line below that is short, above that one is another trick. Let me show you another trick. There is many tricks. You don't need indicators. Many tricks. You don't need indicators. You just need to have an eye. Here is your average price right there. And this is another one. And the farther the bar is away from this line is a strong trend. The farther the bar away from that line is a strong trend. And then the party was over right here. Because what happened in this area here when we first started, right there, the party was over to the short side, right here. Then the market went sideways, right there, which I have showed you that it was the end of it. And the bar start getting closer to those two lines. When the bar start closing and want to touch the line, indicate the trend is over. Somehow, welcome to trading, the market mover took it further down. Technically, it was over right here, right in this area here. Somehow, somebody took this market further down. Something spooked the market because this is not normal. I don't know, you need to read the news. Maybe there is something President Trump said, something the Iranians said, something the Europeans said. You don't know because now the war is totally different than what we used to know from a couple of years ago. Now everything is different. The financial, the politicians, everything is different right now. And this is not our job. It's our job to stay with the trading. So right now, if we look at the Nasdaq, this was the first hit. We're supposed to be finished right there. Somehow, magically, they took this market further down. Fine. But now, if you notice, the bars are getting closer to the line. And if you notice, they didn't even touch the line yet. So that's mean there is an indication that is a little farther down. But once the bar touch this line, the trend is over. The farther the bar is away from this line, the stronger the trend is. And it was supposed to be done right there. And then magically something happened. Somebody pushed the market further down. I don't know what happened, so I cannot wait till I get off so I can see what happened. And then the sell off started and went farther. Now it was supposed to touch this line and it didn't, went farther away from this line, indicating there is a little more potential. Look, start coming to this line. There is a little more potential, is getting closer, and there is a little potential for another bar or two before those two kiss. Once those two touch each other, it's finished. Once the bar start going from the left hand side to the right hand side, the trend is cut off, it's finished. So this is where you can, if you are on a swing trading like this one here, the ES or NASDAQ, once you see the bar flip from the left to the right, he crossed the moving average, whatever moving average you are using, it is finished. It is finished and the trend is over. So you can see magically something happen here. That's what really bothered the hell out of me, because this what happened today in here, and the bars hit the line. They're supposed to be start going to the other side and going up, but the market do whatever the market do. So welcome to trading. Sometimes there is no rules in the market. The market don't care about your rules, my rules. This was an indication to take a reversal, and the market took farther down. Welcome to trading. We cannot fight it, but this is the way it is. So now let me show you, where is this number? 25,596. We need to kiss. We need to touch to finish this trend to the downside, and is running away from that line, but it's getting closer. And look where I have the re-entry reversal on 25,464, leaning by a support line. So now what we are wanna watch, that's why I wanted to stay longer to show you where is the magic happen in the market, not your indicator, your eye. Your professional eye is your money. It's not some stupid indicator, buy and sell. You know, you can buy it from a dishwasher machine somewhere. So now what we are really wanted, here it is, to the bar kiss the line. Once the bar kiss the line, this means the short trend is over. You kiss it goodbye. And all the kisses right now, right there. So it is very important to understand the structure of the market. We should not be sitting with those blinders, but they put for the horses so they cannot look on the other side. What we need to see, the bigger picture, and the only time on and it is over. The short trade is over. I guarantee you, it is finished. Sometimes we need to look out of the box, not your indicator, not my indicator, not somebody else's indicator. Sometimes we need to look a little bit out of the box to understand the structure of the market and the rules of the market, how the market function. Once you have the basic, it will be easy for you to use an auto trade, any auto trade, even a disaster auto trade. because you can manage that auto trade. But when your neck and your pocket sitting on an auto trade and aware how it works, and you are and aware how the market look. Now look at this. They start here, the market is start blinking right there, indicating there is buyers right now. Look here, the dots here indicating there are buyers coming on the movement because they know the rules, whether they are institutional or not. They're not waiting on your RSI and MACDs and all this. They know when it's over. So what we have seen here, done those old fart traders, they know once we touch, this is an entry. They're not waiting on your MACD and your RSI and your ATR and your momentum and whatever you think you have under your sleeve. The only thing you can tell the true trend in the market, not Renko bar, not range. You can auto trade range. You can auto trade Renko. But your eye always has to be on the 1 minute because you are a day trader. You have no inventory. You cannot move the market. We are a little bit tiny. I talk to myself. I don't want to. I consider myself, I'm a little tiny animal sitting on the back of an elephant and trying to go on the same direction as the elephant. Okay. So if you notice here, once this is where it's supposed to be right there, and they took it down. You cannot fight it. And then when the market come, I told you this is where my buy-in entry at that number, and now everything is finished. Stop. So the difference between you and professional traders or those firms, because we have some firms, we do some programming for them, they are already in a long trade. They are already in while you are sitting with a 20 indicator on your chart waiting for confirmation. By the time you get your confirmation, probably another bar. By the time you get in the market has to go back and confirm. So when you are entering the market has to go back and confirm all those numbers. By the time you get in, it's too late. And then what it does, it goes back to confirm those numbers. You're out of the trade, and then turn around and go long. And here it is what most of those traders happened to them. They were going long, and they stopped out. And then the market turned around and go long and made $2,000. And he have a stop loss $200. He lost $200. He's on the right direction, but this trade made $2,000. So the problem is the timing of an entry is too late. By the time he goes in, it's very normal. This market has to go back and confirm. Two options for the trader to do. If you are a very well-trained trader, like what I have showed you, the trend is going to be over. And look what happened. That's why I wanted to stay longer. As I told you before, and look where I was waiting to the max. I wanted to enter the market here, but didn't even come to my level. And look what happened now. The market is coming to this area. It might pull back to reconfirm. Now, if we look at this area here, the red has go down 3 levels, and the buyers went up 3 levels. Another thing, you are ahead of the others, as I told you to my traders. We don't get excited when we see the 1 minute turning from red to green. I respect that because the 1 minute might turn back to red again. But when the 1 minute slammed by 3 minutes green and the 5 minutes green, indicating this boat, is what I explained it to you, because we don't have a V shape like the older days. The boat is turning around and is going from short to long. So by the time those guys comprehend what's happened, whoever is in the trade, he's already in the trade and looking for a profit. For those guys, they are using 20 indicators on the chart. They are waiting on 20 confirmation before they enter the market. By the time they enter the market has to go back and reconfirm. And that's what it is. It's reconfirming. It's going back. Here is the ES, wants to confirm. That's what separate the boys from the girls. That's what separate from. It doesn't matter if you make $10 a day or $40,000 a day. The consistency is more important than to take a short between the two yellow line and you say, well, I made it. I made $500 and I took a short trade between the two yellow lines. Yes, you did. Bravo. Tomorrow, the day after tomorrow, the next week and next month, you're not going to make it. So the $500 you made today by accident, you're going to put $5,000 in losses. Because it was not consistency, it was luck, pure luck. You know, the elephant decided to turn around and you were in the wrong direction and you made money by mistake. You cannot be consistent by taking or jeopardize trades are on a high risk area on the chart. I don't care where you come from. I don't care how much trader you have. I've been doing this for 37 years. I have seen it all. You know, I have seen it all. When I came into this market, my hair was light brown, turned to gray hair, and now I don't have any more hair. So I have seen it all, you know. So you cannot just underestimate the market direction, and you cannot underestimate how disciplined you have to be in the market to make money. It is a place where to make money, and it is a place for the ones who's smarter, well trained, with the right gear, going to a war. When you start your Ninja Trader, you're going to a war every day. You're putting your account against somebody you don't know. You're not the only one is auto trading. Worldwide, people are auto trading and trading. And this is where the ones are more equipped and more trained, the right boots, the right gear, the right internet is going to win over the ones are not qualified to go to a war. They don't have boots. As an example, now everything is different. But when we start going in the public, it was a nightmare. We had some traders using, I mean, you have no idea, I mean, what we have seen in those last 16, 17 years dealing with public. When we first came out, I mean, we always using the latest technology, the latest computer. Then we bump into traders, customers, they came into us 17 years ago. They are using a broken version XP with all kind of commercial and it's not even a real version. And he have 4 gigabyte RAM on a laptop with a cracked XP sitting on his computer. We had one guy, we cannot say his nationality. He had an XP, crack XP. When you are doing the installation, there is all kind of commercial comes out on the screen. I mean, with all kind of personal items. We cannot even talk about it here in the public. And then we told him, you need to put a right XP, a real version, on your computer. He called NinjaTrader. I said, go to NinjaTrader, maybe that will help you. He was cussing out NinjaTrader, and he told them all kind of things. And one time he called me, he said, every time I'm taking long, my broker NinjaTrader taking the market different direction. When we started 17 years ago with the public, we didn't have a problem with the trading. We had a problem to get people to get the right XP on their computer. Some people, they want to trade on the telephone Wi-Fi. But right now we have much more educated people. They understand you have to have a right computer. You have to have a right version, Windows 11, not a cracked version. But when we started 17 years ago, we had people. It was a nightmare, from a guy. His girlfriend is a dancer somewhere, and she kicked him out, and he lives in a trailer, and he wants to buy an Autotrade so he can get his girlfriend back. To another guy, he want to leave his wife. He wants to buy an Autotrade. He saved a couple $1,000 behind her back, and now he want to leave her. He needs an Autotrade so he can move out of his wife home as soon as possible. So we had 17 years ago, when we came into the public, it was a total different nightmare just to get the proper trader with a normal computer and a normal internet to work. So we had nightmares when we first started 17 years ago. Now it is more disciplined. People got more educated, but still they're not educated with the market. They still get lost from all the commercial, and they think they can cut corner. For the last 33 years in the trading, I've never seen any trader cut corners and become a millionaire in the trading. The rest is fake. The rest is just commercial, has not realistic. So as we see right now, as what I have told you, the market, once the bar touched this line, it was over, and it was over. And now we went from the short to the long, and now you can see the green start showing, the buyers start going over the sellers, and we got it right on time. And this is why we refused to take short when this market entered this area, and we refused to take short from this area here. And the reason is because this is where the market is going to turn around. So we are 26 minutes over the limit time. I hope somebody learned something today. I want to say thank you very much for today, and God bless everyone. Bye for now.